Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by Sue Ennis. She's the head of IR and government relations at HODL Corp, and we're going to be dissecting and analyzing their recently announced Q1 earnings. Now, there's a lot going on at HODL Corp since their new leadership transition. Asher's got a new vision for this company, and they're well on their way in terms of executing that goal. So we've got a lot to cover in today's interview. Before we get into it though, please take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join, and let us know in the comment section below if you're currently holding shares of HODL, how you think they stack up to some of the other miners, and your outlook for this sector as a whole in 2024. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, hot off the press, we have earnings out from HODL Corp. We've invited Sue Ennis back on the program, obviously alongside Anthony. Sue is head of IR and government relations for HODL Corp. HODL has gone through a tremendous amount of growth this year. Obviously the new leadership under Asher. Sue's been there to see it all, and we've got a long list of questions here from the subscribers today. Sue, we can't wait to get into.
Yeah, I am so pumped to be here. I have to be honest with you, I'm having a great day. It's been a really rough 16 months for HODL, and we had our Q1 earnings yesterday. So first full quarter under Asher's leadership, more or less the first full quarter. And we actually had two analysts upgrade us. We beat adjusted EBITDA. Obviously, we're going to get into it, but I'm having a good day. So yeah.
I'm glad you are. That always makes for a good interview. We'll try and keep you in a good mood here with us today, Sue. And as you say, this was the first quarter under Asher's leadership, but Asher had told us really to stay tuned in Q2, Q3. So it's great to see Q1 came out of the gate so strong. Now, speaking of Q1, Sue, before we get into the details, can you give us just a high-level summary of some of the key takeaways and numbers?
Yeah, absolutely. So we reduced our SG&A quarter over quarter. If you look at Q4 2023 to Q1 2024, we reduced our SG&A from about 86% to 39%. We went from 33.4 million a quarter to 20 million a quarter in terms of SG&A. We cut our cost per coin. And our power per cost per coin down from 4.5 cents to 4 cents. We beat the street's expectations in terms of adjusted EBITDA. They had us coming in at 19 million. Adjusted EBITDA, not including the FASB Bitcoin gain, came in at about 22 million. We continue to trim the fat in the business. We retired products that weren't making us money on the HPC side of the business. We retired employees that perhaps just weren't going in the direction that we wanted this business to go in. And so we are really, really excited about just where the business is going. And quite frankly, I think this quarter just really shows that this is where Asher is doing what he said he was going to do, which is clean up this business and set us up for success and continued growth.
Yeah, the results are good. I mean, obviously, that last week we had all the sort of like the big miners with the HODLs coming through, so the FASB benefits for all those there, and you could see some of the net income positions were astronomical. And now this week, apart from yourselves, it's all the sort of the non-HODL miners. Yeah. And looking at sort of like the net income there, and it's a different picture, obviously, and it's great when the Bitcoin price rises and it's green and you can show that unrealized gain, and then but if Bitcoin doesn't hit 70,000 at the end of Q2 or the next quarter, the quarter that we're in at the moment, then all those companies, if they're doing it by quarter, I imagine they'll do it by 6 monthly reporting when they get around to that one, because you'll start showing unrealized loss in the quarter that we're in at the moment. So it's, there's an argument for and against the HODL, and it's been articulated really well by you guys, by the likes of Jason at Riot, and equally by the likes of Dan Roberts and Paul Prager at TerraWolf and Iron, because, I can understand that the both sides of the argument there. We've even had miners buy Bitcoin in the past, so it's there's nothing beyond what miners have done. So hodling, buying Bitcoin, some were selling Bitcoin that they bought at a loss as well. So it's it's a chance you take. But If half of these people who are in the knowledge about where the Bitcoin price is going to be in a year, 2 years, 3 years time, if half of their expectations are right, then everyone's in for a rosy position who've done that.
Even on that note, so we encumbered a portion of our stack of over 9,100 Bitcoin to take out a loan with Coinbase, and from Bitcoin price rising alone in Q1, we actually were able to take that down from 2,500 Bitcoin that were encumbered, approximately 2,500, down to 1,800 now. Just from us not doing anything and Bitcoin just doing what it's going to do.
I fully understand that. And actually, the reverse of that happened with the likes of Argo and I think it was Bitfarms, who had Galaxy loans previously. And every month it was saying we've had to add to the HODL to cover the thing. So it's as I say, it's great when the price is going up, and it seems to be holding over that 60,000 reason. We've had a nice spurt yesterday, so long way to go, because if it keeps going up, the miners will do well. But if it doesn't, Q1 was good for miners in terms of, I look at it from free cash flow. So when you say adjusted EBITDA or 20, that's probably the figure that we're looking at there is, how much did you bring in revenues versus how much you paid physically in cash going out the doors. And yes, these non-cash costs are important, and they're reported. That's why GAAP required to include those costs. But it's cash flow at the end of the day that determines whether a business is going to be successful or not.
Sure.
And it looks like Q1 for literally all the miners was most of them we had Sue on this one. They had 5 million of free cash flow, and they've got a market cap of 10 million. So they were able to achieve with a very small company. You guys are a lot bigger than that, and you've achieved probably what a lot similar to what some of the peers, your peer miners, have done as well. So good numbers.
Sue, I would definitely agree. Good numbers in Q1. It's nice to see Hut finally able to realize some of the gains on that Bitcoin stack. Now, you mentioned another key highlight was the reduction in SG&A. The only thing I could think of there is, I guess, Asher's new hotel plan is working with the reduced hotel rates. But in all seriousness, a really good metric to be coming down. And I wanted to get a quick update on Asher's vision here, how things are coming along. He's a couple months or a couple quarters into the new transformation. Maybe if you could break it down kind of by business unit for us, what are you actually seeing with each of these different revenue streams in terms of Asher's kind of turnaround here?
Yeah, absolutely. So just in terms of, I just want to quickly take a pit stop on the SG&A. So our SG&A, that is something that Asher is laser focused on. So for this quarter, it was 20 million. About 2.9 million of that was restructuring from optimization initiatives. We did have some additional added salary from the business combination and increased headcount from the business combination. But again, we think that is going to be accretive to shareholder value. And we only had 3.4 million of stock-based comp. I urge your viewers to take a look at some of the stock-based comp that some of our competitors came out with. It was pretty high as a percentage of SG&A. And then we had about 1.4 million as well related to the Far North transaction. So all in all, Asher is doing what he said he was going to do, and bringing down that SG&A was a big imperative for us. As I said at the beginning of this call, for Q4, with only 1 month of Hut and USBTC combined, it was closer to about 33 million. So he's doing what he said he was going to do. Another thing, so our managed services business, our Ionic contract, we have announced the annualized revenues of 20 million bucks this year. That's 70% margins. High performance computing business, Asher is very focused on that right now. So we did announce in our earnings that we did retire a couple of the product offerings that we had stood up a few years ago that we just didn't think the margins were there. It didn't make sense. So definitely continuing to focus on those margins as well. Right now, that business is about a 22% margin. So continuing to find ways that we can clean that up is a big priority for him, because the cloud and colocation segment or industry alone in the computing segment is still slated to grow at a CAGR of like 8 to 15%. It's completely uncorrelated to the Bitcoin mining space. It can be correlated to the AI space, but it is very much correlated to the demand for data center and dearth of power that's happening right now in North America, which is why we still really like this business, because these data centers are fully built out. There is room for expansion at 2 of them, but I think in general, the bet that we're making, because yes, we have a data center play. Yes, we did buy H100 chips. And we do like having this sliver of AI in our business. But the bet that we're making isn't that we're Bitcoin miners that are suddenly becoming AI data center operators. And there's nothing wrong with that if that is what some of our, that is what some of our peers are doing. And I think they're doing a good job. But the bet that we're making is that and I've said this before, and Asher said this before, is that the value of stranded electrons is only going to increase. And we are very, very good and have proven that we're very good at building up and capturing value of stranded electrons and power that no one else has wanted, but now desperately needs. And the best way to capture some of that stranded power, even still today, that isn't being used or doesn't make sense yet for AI training, et cetera, is with Bitcoin mining. But as technology continues to evolve, we're designing our platform from an energy perspective. So right now, the best ROI for stranded energy assets is Bitcoin mining. That's great. Our thesis has proven true. Now AI data centers and training, that is a better ROI for some stranded energy assets. But if you look at technology as it continues to evolve, green hydrogen, even just in general, more use cases are going to come down the pipeline. And so we want to continue to hone what we do best. And that is standing up infrastructure, monetizing stranded energy, standing up infrastructure at a discount to everyone else, building relationships with large renewable power players who are also going to need load balancing and partners in this global transition to renewable energy. That's what we do best. We kind of look at ourselves, and I use this analogy on a few buy-side calls today. I was at the Needham conference earlier today. There isn't a case to be made that, and this may sound like a stretch, but I genuinely believe it, that we are sort of like the Romans when they first built the aqueducts during the Roman Empire. You remember how they started building those aqueducts to effectively bring water to populations that was completely stranded and unable to access and inaccessible. And so they were able to bring water from remote areas to be used like 16 kilometers away. That's kind of how we look at ourselves, in the sense that, we're unlocking stranded power. We're partnering with partners who have stranded power and effectively want to almost create like an Airbnb model. Like, how do we monetize this power we're not using? And so high level, that's more like the bet that we're making. And sorry, that was a bit of a rant there, but I'm just very passionate about this, and obviously very excited about our managed services business, because that's a professional services business that also encompasses this entire bet that we're making. So yeah.
In terms of, obviously you've got the three distinct, mining segments there. You've got the managed service, you've got the hosting, you've got the self-mining. Obviously in the April update, we saw the self-mining hash rate at 4.5 exahash. And is that aligned to still transitioning miners from Canada back into US sites?
Yeah.
And as a follow-on to that is, obviously I think we mentioned on the last podcast, we haven't seen a sort of an order for miners from Hut for some time now, and we're seeing these mega orders coming through on a literally weekly basis from the other miners. And I know Asher indicates he's waiting for the pricing. He believed it was still going to come down further. What's the sort of strategy on growing self-mining, or are you comfortable at that level and you've got literally 4 or 5 different business units to focus on?
No, we're still very bullish on Bitcoin mining, because again, it's still a very, very, it makes a lot of sense when you're trying to capture the current and future value of stranded electrons. So when you're in the middle of nowhere, where again, not all of these areas where there's stranded electrons make sense to just go and try and stand up an AI data center. That's not how this works, right? No matter how many peers will tell you that is how it is, that's not the case. So Bitcoin mining still has a tremendous amount of utility. We're still very, very bullish on it. And we've announced we have 1.1 gigawatt of power under exclusivity. We haven't given details, further details just yet, because we are at various stages in the pipeline of that power under exclusivity. Some are much more further along than others. And some of those potential opportunities would make a world of sense to stand up Bitcoin as the key sort of utility for that power. And in terms of the fleet, so we got our fleet efficiency down to about 32 joules per terahash, which is like on average for the total global network hash rate. Because of our proprietary software and firmware as part of our professional services business, we obviously also use that for ourselves. We are able to run those machines opportunistically at like the 29 joules per terahash. But yeah, no, look, we're not confused. we definitely are still bullish on Bitcoin. We definitely understand and are aware that, optimizing the fleet is the priority. But again, Asher is very passionate about and steadfast on the fact that we're going to take advantage of pricing fluctuations, because we do think they're going to continue. If you look at the pricing of machines in Q1 2024 alone, they've all across the board, next gen, present, or current gen, they've all gone down by 18 to 25%. And after our last earnings call, our Q4 earnings call, when everyone, there was quite a few people who were upset we didn't announce a fleet upgrade, literally the next day, the price of S21s dropped. And so machines are not scarce right now. It is not difficult to get machines. It is very difficult to procure and monetize power. That is where we're seeing the supply chain constraints. And so that is where our focus is.
The bottleneck.
Right? Because we could literally buy machines tomorrow, have them installed next month. And yes, maybe the market would reward like a sexy exahash out like headline, but we're not just going to do the headlines. We're like, this is the longer term game that we're playing, and it's power. So anyways, that's how we're thinking about it. But yeah, I mean, I don't see a world where we're just, staying where we are in terms of our Bitcoin mining business, because it doesn't
in terms of the, obviously, you guys were big Ethereum miners before the fork happened in September 22. In terms of utilization of those GPUs, have you been able to use them in sort of HPC activity at all?
Yeah, so we weren't able to find a path with the ones that we bought. We bought this like limited edition Ferrari at the time of NVIDIA GPUs. The model we weren't even allowed to announce. We were like one of 3 customers globally who got this model. And I mean, look, the strategy made sense. We added like a little under 500 Bitcoin to our balance sheet at under $4,000, which back then was a big deal. But no, we haven't been able to find a use case for those.
So what's the plan with these? To get can you they must have value to somebody that can they be used for anything else? I mean, not even HPC, but for I don't know, gaming or whatever like that. I don't know.
I'm not sure. You know what? I'll see if I can get you guys an update on that. I haven't inquired about those GPUs in a while.
It's just that obviously with yourselves and Hive Digital were the 2 big Ethereum miners, and when that stopped, all eyes were on what they're going to do now with those GPUs. Could they, sell them? Could they mine other stuff? And it was a case of, we're going to mine other coins. And I think, to be honest, it's that side from everyone's point of view hasn't really delivered anywhere near. I mean, Hive show their revenues, and I think there were 6-7 million revenues the month before the fork stopped, and the month after it was 200,000. Exactly. It was like a drop off the end of the cliff. And so, they've obviously the communications and the messaging obviously has gone out about HPC, and you 2 guys were the first to sort of like, really, this is the era we're going into. Then it's took some of probably some of the smaller miners to actually go out there and get a client and start delivering on that there. And Sam Tabar has been quite vocal about what they've done at Bit Digital. In terms of getting a client, albeit they're leasing the equipment, leasing the facilities. It's a different model from other people using, but end of the day, he's saying, it's revenues are coming in and not as high revenues are going out. So he's making a nice margin on those. Yeah. And, their results came out, I think, today. So we'll be able to get through their results. I think they'll be on my podcast next week. But I was always interested in how quickly Hive could get to, that HPC side. And deliver that. And I know you've got the data centers. Was it the data centers you're talking about that you're going to sort of move back on? Was that the when you indicated at the start of the conversation about?
No, yeah. So where we put those Ethereum miners back in the day was in the 5 traditional cloud and colocation data centers that we bought in January 2022. So that deal did come with over, at the time, I think it was like 275 clients. And now today we have something like a little over 200 existing enterprise clients, government, healthcare. There's a couple of financial services firms, some media firms. And again, the business is completely uncorrelated to Bitcoin mining. So we do still like it for now. I mean, I think the margins right now on that are about 22%. But again, Asher's looking at like how can we make it a bit sexier? And it does look like there are 2 different data centers within that 5 that could potentially be expanded to accommodate AI.
As an accountant, Sue, that's what I want to hear. I want to hear a contribution, because there's no contribution I'm saying turn things off, because if you're bringing a contribution in, then the question is, if you don't do it, you've got to pay the overhead still.
Totally.
But the contribution will chip away at the overhead. So from an account perspective, I'm saying with 22%, that's a viable business as one of your functions.
For sure. Well, and it's a viable business where we're seeing scarcity, right? Like overall, there's data center space scarcity. So given what's happening in the from a macro perspective, if you've still got 22% margins, it makes sense given the trends that we're already seeing. Anyhow, I'll definitely be updating you guys as soon as we disclose more on.
Let's see what those margins are from the miners end of Q2 and see if they're self-miners, see if they're at 22%.
Yeah.
Hey, Sue, switching gears a little bit, talking about the macro environment, you guys say you're making bets on stranded power and the emergence of this energy resource as a scarce resource, which I would completely agree with. HUD has also made another big bet in terms of your HODL, and you guys are known and have been known for having one of the biggest HODLs, best balance sheets in the industry, really in the world for years and years, right? What is the exit strategy with that HODL? And this is something I asked Riot as well. I remember back in the day with Jamie, I think she said, I'm not selling anything till we're at 500,000 or something like that. Is there still a target price on this, or is this now viewed as an asset that you can borrow against, or what is kind of the goal with this HODL?
Yeah, so the goal with this HODL remains that we're going to be strategic with it. So, as I said earlier, we were or did I say this earlier? I don't know. I've had so many interviews today, but we were in a position where we were able to take out a loan with Coinbase, and we encumbered. Yeah, I did say this earlier. How we encumbered 2,500 of our Bitcoin, and just from sitting there, the Bitcoin price rising, we were able to pay down, or we were able to unencumber like 700 Bitcoin. So I think we're very bullish on this asset class going up and to the right. Even today, I was on a call with, again, a buy-side fund at the Needham conference, and they were talking about how very shortly wealth managers in the US, like RIAs, are going to, like from Charles Schwab and Fidelity and TD and et cetera, are going to have the opportunity now to buy spot Bitcoin ETF for their clients. So that is trillions of assets under management that haven't been able to express that opinion. I mean, they've been able to express it through buying directly custody through Fidelity, et cetera, or buying Coinbase or Robinhood. But because particularly in the US, usually there's like a 6-month waiting period that compliance teams make RIAs go through before they are able to start buying a new product. So we're getting up to that 6-month period. And point is, this is now a new asset class, a new buyer into the market of spot Bitcoin ETF. As we know, spot ETFs need to be 1-to-1 back. So again, like our bet still is that this is a really valuable treasury asset. We're not just going to blow our brains out, especially not now, given all the catalysts for potential future price appreciation. But we want to be strategic with it. We're not going to just keep relying, like a lot of people, on just diluting investors, next way to Tuesday. Like we ran a couple numbers, and again, I'm not poo-pooing our peers. There are some super strong operators out there. We're friends with CleanSpark, we're friends with Riot. But if you look at the top sort of 5 or 6 publicly traded miners right now, all of whom have been pumping the market, standing up ATMs since the end of Q3, if you invested $1 in the majority of them, that dollar now would be worth 86 to 71 cents. And then miners across the board year to date have all been trading down like north of like negative 20%. So again, Asher and Mike are owners in this business. They own 11% of the company, around 11% of the company. And so they really do genuinely take an ownership mentality in terms of like how we're going to grow this business. And it's not just dilute at all costs. Like the retail army, like you guys aren't a piggy bank. So at least that's how we look at it. So anyway, so point is, that's where HODL matters, because we can pull working capital using derivative strategies from it. We can encumber some of that stack to against loans, et cetera. And then we also focus on project level financing, right? For some of the projects we want to do that have no parent recourse, very favorable debt terms. So that's how we're thinking about it.
Yeah, flexibility, optionality.
Agility, 100%. And then, but still capturing upside in Bitcoin. Right? We're just in the beginning innings of this asset class. So
Exactly.
Yeah.
We were also seeing, Sue, you mentioned all these new entrants to the market. Now that it's earnings season, we're seeing all the bank earnings coming out as well, and we've seen a ton of banks that have exposure to the
Right.
ETFs in there. So I agree with you. I think we're really in the early innings here. We're on the verge of something big, and I definitely like the HODL that Hut brings along with them.
But guys, to that point of all these banks that are now starting to buy the ETFs, the potential wealth managers coming in, the conversations I'm having with buy side institutions, because if you look across the cap tables, it's a lot of hedgies, a ton of retail, and then index funds. And HUT isn't in the Russell 3000 or 2000 yet, hopefully soon, because we're now finally US based, which means we're finally eligible. But the conversation I'm having with some of the like old school small mid cap tech funds is why would I buy these stocks? You guys just dilute, like crazy. Um and there seems to be a lot of business models that are like reliant on just diluting and growth at all costs without consideration of IRR. And so I think in order to attract institutional investment, you have to take that ownership mentality. You have to look at things like IRR. You have to look at, okay, great, I invested $1 in this business. What did it return me? Versus just, I'm focused on returns at all costs, growth at all costs. We're not going to get the institutions guys into the space if we keep thinking like that. And the other person who is blaring the horn on this is Patrick from TerraWolf. I have a lot of respect for that guy. He's been screaming about this for quarters, and him and Asher are very aligned. Asher thinks the same way. Anyway, sorry to go on a rant there, but like, I'm trying to tell you guys that like, this is why we're doing things differently. I know you want to see a 50 exahash headline at a head, but we are not going to do things that don't actually drive IRR, because we're not going to get the institutional investment until we build an institutional business model. Does that make sense? And that's just how we're also thinking about it.
Absolutely. Just moving to the balance sheet, and we've always had conversations about the strength of the HUT balance sheet before the merge. Looking at the balance sheet for the first time in its full position now, in this first quarter, you look at the net asset position of the balance sheet. You look at the market capitalization, and then I look at the enterprise value. So I then go another stage further.
Yeah.
And you're really into the realms then of like, you're investing cents to get a dollar of assets. It's, your book value is less than your market cap.
Yeah.
So you're getting, but look at the premium of some of these miners is getting, the gap is like widening. And I don't know why. There's a I've asked a lot of the podcasts that we've done with some of the miners this week is that, why is that gap there?
Yeah.
The clean sparks, the ciphers, the marathons have got this like, if I do a metric where you look at the value of the exahash by enterprise value, and yours is, I mean, it's down at $44. If you take the enterprise value, divide the hash rate into it, you're at $44 a terahash, or 44 million per exahash, and you've got CleanSpark at $168 million per exahash. You've got Cypher and Marathon both at 130 million.
Yeah.
It puts you multiples cheaper. And what I mean, do you have any sort of like with the conversations that you're having with sort of the big institutions? Is there any reason why some of these miners are just not getting that same premium applied? Is it because of the site? Is it because they're so much bigger and in terms of self-mining, and that's what they want to see, or is there another reason for it?
Yeah, so just really quickly to echo your sentiment on HUT, we've got an EV to EBITDA of about 3.2. About 75% of our market cap right now is basically our Bitcoin HODL. So you're getting three profitable businesses, HPC, the managed services, and then like we've got another piece of our business and a self-mining business, almost for free. And so why do I think this has happened? Well, specifically for HUT, I mean, we got to call a spade a spade. We had a really rough year, egregious short report that we obviously denied. CEO transition is never easy. And then it took us forever to close this merger because the SEC wouldn't approve it. So we weren't able to grow and invest the way that some of our peers were at the time. And so I understand where retail's coming from. They're like, what the hell? and even on the day of the short report, we did lose like 40% of our market cap. So I think it's been a process of, at least for HUT, us having to regain that shareholder confidence and sentiment back. And I think that these results, like, we also are very rare, we need to execute. And I think this shows that Asher is on the path of executing and saying and doing exactly what he said he was going to do. Now, in terms of everyone else, it certainly helped Mara and Riot that they were added to the Russell 2000 6 months ahead of all of us. HUT has never been eligible for any of these businesses until literally this year because we weren't US domiciled. So I think definitely, those indice additions alone are super helpful. And honestly, like, they have done the ATMs, when you have hedgies doing 100% turnover of your stock, like, that does create the volumes, right? And then subsequently, a lot of these indices are volumes based. And so then if you see Mara has just made it into, I forget which indice it is that they just made it into, but that is volume based
index. 3,000?
No,
the 600.
Yeah.
S&P,
yeah, the MSCI World 600, I think, or something.
Yeah.
And again, that does come from some well-timed ATMs, retail fervor. They did have some well-timed headlines. Again, obviously, I'm not poo-pooing Fred. He's done a lot of smart moves, but I do think that has something to do with it. But like I said, we also think that, like, everyone is getting a lot smarter on some of the disconnects and valuations in this space. There's more and more insties and TradFi that are looking at this space. And also, again, some serious macro trends that are coming in the favor of Bitcoin miners, Bitcoin catalyst price appreciation, dearth of power availability. So I think it's going to be an exciting 3 to 5 to 10 years for HUT. And I'm pretty jazzed. So
yeah, I mean, 2021 was a in terms of, you were probably, along with Hive, the two popular miners of that year, really.
You had like a cult-like
your market cap went to $2.5 billion on your own. Never mind merging with another company. And
exactly.
So you're right. It has come down to sort of like, in terms of the performance of this last year and the issues that you've had in Canada with the Drumheller site and the energy provider, hasn't done well. But Asher was clear to look at him from the next quarter, really, not even this quarter. So this quarter is like green shoots. And I think he said that as I recall, Q2 or judge me by Q3, I think he said, was his exact words.
Yeah.
I know you're doing most of the talk on the last podcast, so we did manage to get him in for a few minutes to sort of give us a high level of
and guys, it's not that Asher doesn't want to talk to any of you guys.
No,
It's just that he's like, Sue, I got work to do. Like, you guys don't want me on podcasts. You want me cleaning up the biz and like trimming the fat. Like, trust me, no one wants me on the podcast. I'm like, get out. Go. He's in Texas right now.
Nice. I mean, we've had him on the podcast twice, so he can articulate the position. But again, he'll be judged on performance, and exactly. So we've seen a good quarter here. We want to see the next quarter when things aren't all going to be on your side. So there's not going to be, unless we see a Bitcoin spike to 100,000. The sort of the FASB benefits may not be as apparent to some of the miners at that point in time.
Yeah, I mean, that's also why I didn't come on this podcast being like, we made 276 million. Like, that's not real. It's obviously a very nice sweetener, but like, take all that fat out. We made 22 million in adjusted EBITDA. Again, I'm not poo-pooing Riot, but they made 11 million in adjusted EBITDA, and look at their market cap relative to HUT. So anyhow,
Point made for sure. And Sue, just 2 questions for you. I know you've got to run here shortly. 2 other ones that came up from subscribers. You just mentioned the M&A activity with USBTC. Obviously, that did take a lot longer than you had hoped and investors had hoped. Is there any more thought of M&A on the horizon this year, or do you guys feel you now have the pieces you need within HODL Corp?
That's a really good question. I mean, we certainly have like the balance sheet and the project level strategy for financing in place to have a lot of flexibility. I'm not sure. I'm not sure. To be honest, actually, I'm not sure I have a good answer for you on that. All I know is that, like, I think we're very excited to share more details on this tremendous amount of power that we have under exclusivity when we can. I think that's sort of the best way I can answer that.
Fair. And we appreciate the transparency. Yeah, I was curious if maybe a little gun shy from the M&A activity in the past or not, but we'll stay tuned for that. And then the final one from me, and I'll pass it back for closing thoughts, Anthony and Sue, is just any upcoming catalysts Obviously, we've talked about Asher's roadmap and the evolution of HUD-8 Corp. Is there anything specific we should be watching for in terms of dates or headlines here, Sue, in the next few months?
I think just stay tuned. We are doing an analyst day on June 20th. So we might see hopefully some good reports come out of that. But I think, you know what, just stay tuned. We're heads down and focused on executing and showing you guys numbers. And really just focusing more on what we mean by the fact that we're an energy company. This isn't just pivoting from Bitcoin to AI. Like, we're an energy play, full stop. So stay tuned.
Sounds great. Yeah, it should be an awesome event, you guys. If you're still watching the program, make sure you hit the subscribe button, hit the like button, big help to the channel. If you have any other questions for Sue, Asher, the rest of the team at HUD-8 that we weren't able to get to today, leave them in the comment section. We can send those over to Sue directly. We really appreciate your time. Always enlightening, Sue, and congrats on a very strong Q1.
Awesome. Thank you so much. And I'll make sure I can get Asher or Mike with me on next time too. So thanks, guys.